The last time we saw a crash like this, fortunes were made, and it's starting to happen again. President Trump says the economy is booming.
The economy is doing great. The stock market's higher now than when I came to office.
And to keep the economy booming, we need to slash interest rates.
We want to see interest rates come down.
But some people don't agree with that economic policy. For example, Ray Dalio is the founder of Bridgewater, which is the largest hedge fund in the world, and he says that we are entering a debt crisis.
And now we're in a situation where the government has such a large amount of debt and has a problem facing that debt, paying that debt.
In fact, he believes that lowering interest rates can make this debt problem even worse.
Right now, we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession.
And that's why in this video, I'm going to break down what's going on, and then I'm going to show you how this can create an investment opportunity for you. History doesn't repeat itself, but it does rhyme. And if we take a look at history, anytime we've seen these big clashes of one side saying the economy is great and the other side saying there's a big debt crisis, big wealth has shifted hands. We can look back at the 1970s when the United States government wanted low interest rates and a lot of money printing. Warren Buffett was warning about inflation. And that money printing and low interest rates led to the worst inflation that we have seen in the last century, which helped gold investors, commodity investors, and oil investors get rich. Fast forward to the 1990s, and we had one side saying that the future of the world is technology, and we had other people saying that we have a big internet bubble, which led to the dot-com bubble of 2000 to 2002. But the people that understood that were also able to make fortunes because you were able to buy great internet companies at a huge discount during the dot-com bubble bursting. And then we had the 2008 great financial crisis, where some people leading up to it said that the economy is booming and the housing market is very strong, while others were saying we have a little debt problem in the housing market, which ultimately led to the biggest housing market crisis that really many people have seen in modern day history. And again, some people were able to become extremely wealthy by investing after that bubble burst. Now here we are in 2025, and you're starting to hear those differing of opinions again. On one side, you have President Trump saying we need lower interest rates to keep stimulating the economy, to keep debt strong, while we also need lower taxes to keep businesses booming and to keep the American people strong with more money in their pockets. And then we need higher tariffs to strengthen the United States economy and our national security and bring in more revenue for the United States government. Ray Dalio, on the other hand, says that we have too much debt as a country, and in order to save and protect our economy, we need to do three things. Number one, we need to decrease our government spending. Number two, we need to increase revenue in taxes for the United States government. And then number three, the United States government should follow what's called the 3% rule, and I'll explain that in just a minute. And this is where it'll be very helpful to understand where our economy is and the concerns that people have in our economy on all sides. In 2024, the United States economy was $29.1 trillion large. This is a measure of all spending that happens in our economic system, and in 2024, the United States government generated about $4.9 trillion in taxes, and then the United States government went out and spent all $4.9 trillion plus an additional $1.8 trillion. This deficit spending is spending that the United States government did, which they did not have tax dollars to pay for. So this is money that the United States government spent that they did not have, that they had to finance through debt, which means that deficit spending accounted for 6% of total GDP, meaning this $1.8 trillion is about 6% of the $29.1 trillion economy. Now let's compare these 2024 numbers with the estimated 2025 numbers. It is estimated that the United States economy is going to be $30 trillion by the end of 2025. Again, this is GDP, a measure of all spending. It is estimated that the United States government is going to generate about $5.2 trillion in taxes, and then it's estimated the United States government is going to spend an additional $1.7 to $1.9 trillion in deficit spending. That's money that they did not generate from taxes, which, if you do the math, means that our deficit spending is somewhere between 5.7 to 6.3% of our GDP. Now, what every single person wants to see happen, from President Trump to Ray Dalio to everybody in between, is they want to see the economy grow, but people have different opinions on what to do with this deficit spending right here. And the concern with this deficit spending, especially that Ray Dalio has, is that if you keep spending money that you don't have, that can make the inflation problem worse. It could weaken the dollar, and it could create a lot more long-term concerns for the economy. We know why it's good to have a strong economy, because that means people have jobs. It means people are seeing growth in the incomes. That means businesses are making money, but This is the concern that Ray Dalio is highlighting. Now, before I get into how this actually creates opportunity, you need to understand how this deficit spending is actually financed. And for those of you that are investors or want to become investors, I also want to let you know that I put together a free investing masterclass for you where I walk you through how you can invest your money and find hidden investment opportunities before the crowd. I'll show you how I and the analysts at my firm research investment opportunities so you're not just chasing hot stocks, and you can understand where money is moving before the crowd. It's a completely free masterclass, and when you register for the masterclass, you'll also get access to Market Briefs, my investing newsletter, as a free bonus. So to register for my investing masterclass and get Market Briefs, all you have to do is click the link down in the description below. There are 3 things you need to understand to really understand how deficit spending works and how it's financed. Number 1 is taxes, because the United States government goes out and they generate tax dollars. I'll show you from where in just a second. Number 2, the United States goes out and then they spend money. And then because they spend more than what they generate from taxes, they then have to finance that additional spending from that deficit. So let's break this down. Number 1, number 2, number 3. As a licensed attorney, who's not your attorney, who has spent a lot of time studying the tax law, what I can tell you is that the United States government has about 10 different categories of taxes that you want to understand. Number 1 is, of course, your income tax. You go to work to get paid, some of the money is going to go directly to the government. Number 2 are your payroll taxes. This is your FICA taxes. On top of the payroll taxes, you and your employer are going to be paying these payroll taxes, which includes, of course, Social Security. And number 3 is your capital gains taxes. This is now, if you invest your money into the stock market, you sell that investment 5 years later for a big profit, you have to pay capital gains taxes on the profit from your investments. Number 4 are sales taxes. You go to the store, you buy something, you have to pay sales taxes on that. Number 5 is estate taxes. If you are wealthy, you pass away, and you pass down big sums of wealth to your heirs or to other people, that has to be taxed. That's the estate tax. Some people call it death tax. Number 6 is the tariff tax. We've heard about this a lot in 2025, which is when a company is importing products from a foreign country. You have to pay that tariff tax when that product comes into the United States. Number 7 are corporate taxes. If corporations make a profit before the actual owners make that money, the corporation has to pay a profit on that money. Number 8 are property taxes. You buy a house, well, you have to pay property taxes on that house. Number 9 are your state and local taxes. Pretty self-explanatory. Some states, some cities have taxes on top of everything else. And number 10 is other. And the reason why I just call it other is because then this list would go on and on and on and on. And this could include things like toll taxes, cigarette taxes, alcohol taxes, and everything else. These 10 things then drive the tax revenue into the United States government. And then the United States government has to decide how they're going to spend that money. Here's where the Treasury Department says that money is going. Take a look. The top 10 places where the United States government is spending money are: number 1, Social Security; number 2, net interest expenses; number 3, Medicare; number 4, health; number 5, national defense; number 6, income security; number 7, veterans benefits and services; number 8, education, training, employment and social services; number 9, transportation; and number 10, natural resources and environment. Now, all of that sounds good. The only problem with that is that the United States government is spending more than they're generating from taxes. They don't believe in a balanced budget, and so when the United States government now has to spend money that they don't have to fund all of those things that I just showed you, that's where deficit spending comes into play. That's where the United States government now has to go out and borrow money in order to fund all this additional spending. Where did they borrow that money? They borrowed the money from, number 1, regular people like you and me who lend money to the United States in exchange for interest. So if you go out and invest in a treasury, that's lending your money to the United States government. Number 2, the United States government can borrow money from foreign countries. That's countries like Japan, the United Kingdom, and China, who own a lot of United States dollars because they're lending money to the United States government in exchange for interest. But these 2 entities, regular people and foreign governments, are not enough. That's where the United States government also works with the central bank, the Federal Reserve Bank, to borrow money. Now, the interesting thing about the Federal Reserve Bank is, although they're called federal, they're actually not a part of the United States government. It says so on their website. They're not a reserve because they're not sitting on any cash. And number 3, they're not a bank because you and I can't go there to deposit money. But the Federal Reserve Bank has the ability to print money out of thin air and lend it to the United States government. So when the United States government keeps spending money they don't have, well, then they have to rack up this deficit. And the problem with that is when you keep creating this money out of thin air from the Federal Reserve Bank, this money now dilutes the value of every dollar you have in your savings. It dilutes the value of the earnings that you get from your job, which means the prices of things go up because the value of the dollar and the buying power of the dollar goes down. That's what inflation is. Everybody says inflation is the prices of things going up. But in reality, inflation comes from the word inflate, What are we inflating? We're inflating how many dollars are out there. You're inflating the monetary supply, which the byproduct is, of course, the prices of things going up. And this is where Ray Dalio and President Trump both want to see the economy grow, but they have different opinions on how to get there. President Trump says that we need to decrease taxes for most of these, except President Trump does want to increase this tariff tax revenue. So he's hoping that this increase in tariff tax revenue is going to make up for the cutting of taxes in many of these other places. So President Trump wants to generally decrease taxes while hoping that the increase of tariff revenue is going to make up for that. He also has talked about decreasing spending, although it does look like we're going to be increasing our spending in 2025 and also increasing our deficit spending. What Ray Dalio is saying, and I'll put this in blue, that way it's a little bit different. Ray Dalio is saying, hey, you know what? We need to increase our taxes a little bit, and we also need to decrease our spending more significantly. That way we can cut down this deficit. Now, I promised you earlier in this video that I would explain this 3% rule. And what Ray Dalio says is if you want to avoid a debt crisis, the national deficit that you have should not exceed 3% of our GDP. Right now, we are seeing our national deficit at around 6% of our GDP. And in order to bring the national deficit down relative to GDP, essentially, you have to decrease that deficit. How can you decrease that deficit? You can spend less and you can earn more. Now, this is where things get difficult because it might seem like a simple budgeting problem. Can't we just generate more tax dollars? Can't we just cut our spending to fix this problem? And yes, we can. But both of those have a consequence. If you increase taxes, somebody is going to be upset. I mean, if you increase tariff taxes, we know that people get upset. Just look around you. If you increase income taxes, I guarantee you somebody's going to be upset. So increasing taxes obviously could help lower the deficit, assuming that spending doesn't go up, but somebody's going to have to pay the price, and people don't like paying the government taxes. Number two is we can cut spending. Well, that's also not easy because every time the United States government pays somebody money, that's somebody's salary. That's a business's income. And so when you saw in early 2025, Doge was cutting expenses and they were cutting funding, well, that meant that people were losing jobs. That meant that businesses were losing government contracts. That meant that less money were going into the hands of those people because ultimately that money is going to people, and every business is made up of people, every corporation is made up of people, every entity is made up of people. And so when the government doesn't spend money, that also affects people. And this creates that tough situation where either you can keep living high and keep doing this deficit spending and hoping nothing bad happens, but that's where Ray Dalio says if you keep racking up this extremely high deficit spending, it could create a debt crisis, which could hurt the value of the dollar. It could lead to, like what Ray Dalio says, something worse than a recession, but that's the concern. And when it comes to interest rates, Ray Dalio says essentially lower interest rates lead to more borrowing. And yes, it could lead to more people borrowing money on a mortgage and more money for your car and all that other stuff, but we're talking specifically about the United States government. Because if you remember what I showed you, the second largest expense for the United States government was what? Net interest expenses. What is that? Well, all this deficit added up together is our national debt. The United States government owes $37 trillion in national debt, and interest rates are higher now than they've been over the last 2 decades. Well, the United States government is the biggest borrower in the world, and with the higher interest rates, the United States government has to pay all that money back. Who are they paying it back to? The people that invested in treasuries, that's the regular people, that's the foreign government, and the Federal Reserve Bank. And that means more of your tax dollars are being used, they're being spent to pay back the national debt. That is the second largest expense. And President Trump is saying, well, if we can cut the national debt, then that expense would automatically go down because then the United States government could refinance their debt. And if you refinance your debt at a lower interest rate, your expenses go down. But there's also a consequence to that, because if you lower the interest rate, yes, that spending could go down because your interest payments go down, but what also happens when interest rates go down? People tend to borrow more money, which could then lead to even more national debt, and you can start to see how lower interest rates with no more spending would be good. But we know that the government doesn't like not more spending. The government likes to spend because we want to see the economy grow. And the biggest spender in our economy is not Tesla, not Amazon, it's not you and me, it's the United States government. And so if borrowing becomes cheaper, yes, the spending goes down, but normally when you have that extra budget, that extra money, somebody's got to use it. And that's where we could see the United States government then spend more money, which would boost the economy, but then we have more debt, which has to be serviced. and you can start to see the double-edged sword. Now that you understand what's going on, you understand the different perspectives, let's talk about how this creates opportunity. Because some people are saying, hey, you know what? If we see lower interest rates, we see more spending, that could create more inflation, that could create more concerns about the dollar. That's why some people are investing in things like physical gold. They're investing in things like foreign countries as a hedge against the United States economy and the United States dollar. That's what Ray Dalio says. Ray Dalio says that essentially the United States is a great economy. It is the best place in the world. However, every economy, every country, every empire has a lifespan. And when you keep spending more and more and more debt, well, that can create the end of that empire. And that's why Ray Dalio says that having that sort of diversification can be helpful. President Trump says, well, the United States is the best place to be. These tariffs are going to bring more jobs into the United States. These tariffs are going to bring more companies into the United States. It's going to help the economy get stronger. It's going to help the national security. There's no country, there's no economy like the United States, and the tariff revenue is going to make up for the loss in other tax revenue. And hopefully, we'll see if this happens or not, and hopefully the government will reduce spending, which will help automatically reduce this deficit, along with other government plans to help pay down the national debt. If that happens, that's why President Trump says that the United States is the best place to be investing your money into the United States economies, into the United States stock market. At the end of the day, we know that investors are the ones that win. So whether you're investing foreign or gold or in the United States, at the end of the day, investors are the ones that are going to win as long as you are a long-term investor and you're actually investing your money. Because if you're just working a job and you're not investing, if you're just saving your money and you're not investing, you are going to lose no matter what happens. Why? Because we know that inflation is going to happen, period. That's not a question, it is a fact. If inflation happens, the value of your savings are going to drop, and the value of your salary is not going to buy you as much. Investors are going to win. So you have to be an investor, and you can find your own strategy as to why, but the key is you need to be investing your money in a way that aligns with your goals and your strategies. And I have a lot of videos on my channel which can help you figure out what are your goals and your strategies to come up with an investing plan for you. You can also watch my investing masterclass where I'll show you how my firm and I find investment opportunities. Again, I have the link for you down in the description. But the key is you need to be investing your money if you want to be able to capitalize on changes that will happen. We know that our economy is going to go through a lot of changes in the next 5 and 10 years. But if you want to be on the winning side of it, you need to understand that things go up, things go down, and you want to be able to win no matter what happens. America is entering a death spiral.
When debts rise relative to incomes on a chronic basis, right now for the U.S. government, it's almost $1 trillion a year that goes to interest payments. When you run a large deficit, you have to sell debt to do that. And when I calculate it, the quantity of debt sold to be sold is much